Assalamu alaikum, everybody. My name is Hassan Junaid Nasir. With me is our President and CEO of Pakistan Mortgage Refinance Company, Mr. Mudassir Khan. We'll be giving you a brief introduction about the Pakistan Mortgage Refinance Company. If you could please settle down, we would really appreciate it so we can start. We're already delayed as informed by the chair.
Assalamu alaikum. If we can have your attention a little bit. So I think my name is Mudassir Khan. I'm the Managing Director, CEO for Pakistan Mortgage Refinance Company. It is a new concept in Pakistan. I think we have colleagues here from various countries. So Malaysia would be very familiar with a similar concept because they have a company called Chagamas, which has been in existence for past more than 35 years or so. It's a similar concept as in, US. I don't know if you're familiar with Fannie Mae in the US, which provides refinancing for onward lending for mortgages for housing finance. That's a concept. So Pakistan Mortgage Refinance Company, the reason why we are here is also because Pakistan Mortgage Refinance Company in Pakistan, while it is new, we have been able to introduce many products which are actually Islamic products for refinancing. So we have an Islamic refinancing product, a pre-financing product. We have a credit risk-sharing facility for on Islamic basis, and we also have done a refinancing sukuk in Pakistan as well. So a variety of products which are very unique, which my colleague Junaid will talk about in a minute. I just wanted to give an introduction of what we have done so far. So if we've established or actually notified as a development finance institution, so it's a unique company in that way as well. In 2017, we got a license from the State Bank to initiate and commence our business in 2018, June of 2018. So we are now almost about 4 years old, roughly. And we are owned primarily by the private sector, but majority of the largest shareholder is the government of Pakistan, which is Ministry of Finance. It's at about 28%. And also by National Bank of Pakistan, which is a public sector bank. So together, the public sector holding is about 43% now. We also have the majority shareholders are private sector banks, mainly large banks, all large banks in Pakistan, like HBL, UBL, Al Falah Bank, Askari Bank, all the banks in Pakistan, major banks. We have also been able to convince IFC to come in as an ordinary shareholder in PMRC. So we have IFC as a shareholder, which is one of the largest or equivalent to the largest private shareholding in PMRC. We started our business with a credit line from the World Bank for $140 million, which was all lent to us through the government of Pakistan. So we had that funding, and we were able to, with our capital and with that credit line, we were able to initiate our operations back in 2018. Quickly. So just to let you know where Pakistan, since mortgage is a very important product in Islamic financing, it's an asset-based product and an important product for Islamic banks and institutions in Pakistan. Pakistan still is at a very low level of mortgage to GDP ratio. If we look at Malaysia, I talked about Chagamas. Malaysia is at around 36%. Mortgage to GDP ratio. In some of the large developing countries like US and Singapore and others, these ratios are in 90s and in some countries even over 100%. So Pakistan is at a very low. We were at 0.2%, and only in the last 1 year we have grown to about 0.3% of GDP. We have an annual demand of about 1 million housing units on an annual basis, and of that, almost 60% of that is met, but more than about 40% gets unmet. So about 350 odd thousand units get added to our shortfall, and as a result, we have an acute shortage of housing units in Pakistan, which is estimated at about 12 million housing units so far. That number. So in order to catch up with the rest of the world, we did some simulation, we did some numbers. So what is it that it will take for if Pakistan to actually get to that level of, maybe if you want to get to the level of Bangladesh or even Malaysia at some point in time. So in those simulations, we did use constant GDP growth at 5%. And we say what would it take? What growth level do we need to achieve to get to that level? Let's say if 3% or 5% or 10% of GDP. So even to get to 3% of GDP, we need to grow at 37% on an annual basis for 10 years to get to 3% of GDP. So it's a huge task for Pakistan to get to even 3% or 5% or 10% of GDP over the last year. Luckily, with the push by the government of Pakistan last year, we were able to achieve a mortgage a growth of more than 50%. So we are very much on, if we continue with that focus, if we continue with that momentum and push, we will see, inshallah, that Pakistan will also grow to that level of mortgage to GDP ratios. Next slide. So last slide I'll talk about. So in terms of the outstanding mortgages, as I said, last year we saw a huge growth in mortgage financing. So we, in 2018, when we started our operations, the numbers were at very low levels of about 106 billion altogether in Pakistan, the mortgage units. We are now at 150 plus billion overall mortgage in Pakistan, which is still very, very low. But last year we saw that number grow by more than 50%. PMRC has a share which has grown in 4 years. So we are now at 16% of the market in that ratio of 151 billion. Our share is about 16%. Although we see that if this momentum growth continues in the mortgage industry, our ratio will probably stay more or less constant or may even decline if the ratio growth in the private sector and the mortgage sector is much higher. And but we were able to achieve a much, we started with a very low number of 1.2 billion the first year. We grew exponentially. We grew by more than 500% in the first year, then almost 100% the next year. Last year, we grew over or close to 60%. So our outstanding right now, as of now, it's more than 25 billion, but we closed last year at about 23 billion plus. So I'll request Junaid. So I just wanted to give that introduction. Mortgage total number? No. Tenure is, the State Bank allows the tenures. I mean, it can vary. So our average tenure will be probably now roughly about maybe 12 years. But the central bank allows mortgages to be up to 25 years tenure.
Fannie Mae in the United States? Is it subsidized by the government like Fannie Mae and Freddie Mac in the United States?
We were initially the credit line that we received from the government of Pakistan that was subsidized. We have also received some additional benefits from the State Bank of Pakistan in terms of banks utilizing our financing. So there are benefits.
I'm asking because these papers, can you convert them into sukuk? Have you done sukuk out of them?
Yes.
Very good. And this is in Pakistan.
In Pakistan.
What kind of maturity? Tenure? 10 years, 15 years? Or?
So we started with very low maturities. So we were able to, because the market was very shallow in Pakistan. So the first few issues that we did were 3 years. The next we did were for 5 years. And we have recently done 3 issues of 10 years. 10 years.
Very good.
So the market is sort of, that's right. Yeah.
Contracts underlying? Yeah.
So
I'm asking what Sharia contracts underlying your papers?
I'll be actually discussing the
that's
structures.
in the presentation. So I'll wait for Junaid to.
Okay, thank you.
Okay. So basically, let me just give you a brief about the role of the PMRC. The primary role for the PMRC is to actually give fixed rate facilities to the primary mortgage lenders, that is the institution. Now, what is the benefit of that is that actually it instills the confidence and it helps the institutions to offer affordable financing to their customers going forward. Now, on the financing side, we actually offer lower rates, so the institutions can actually build up their profit margins and still be affordable to the especially the middle income and the lower income groups. Where you've already seen that from last 2 years, due to the pandemic and other economic factors, the government was emphasizing morely on Mera Pakistan, Mera Ghar and government subsidy schemes. So PMRC played a vital role in providing the support and facilitating the institution to actually start their MPMG portfolios. Now, on the second side, we actually offer fixed rate sukuks. Okay. So we initially we had funding from the World Bank and other lenders, but now since we have stabilized, now we are actually arranging the funds locally as well. Okay. Going forward, this, if you could see, this is the product menu that we offer. The business model that we have adopted is based on the principles of Sharkatul Aqd, okay, where two or more parties can come and combine their assets or their labor and liabilities to make profits or bear losses. Now, the primary two products that we offer is the refinance and the pre-finance. It is offered both in the conventional as well as the Islamic side. What we have actually done is we have actually mapped the customer base and the segmentations and the variants that the institutions are offering on their books, on their wallets. So what we have done is we have the normal rate customers, the BAUs, we have the middle income and the lower income groups. We offer specialized packages for the government employees and the pensioners, and government subsidy schemes like Mera Pakistan, Mera Ghar. As I told you earlier, that PMRC actually facilitated the institutions in building their Mera Pakistan, Mera Ghar by giving them pre-finance on their existing portfolios, and so that they could actually go and generate more businesses in the government subsidy scheme. At the same time, as Mudassir Sahab just told you, that there is almost a 12 million shortage of the on the supply side. Now, we have a developer finance product where we facilitate the institutions to lend or to give funding to the real estate developers for the projects to build housing societies, apartments, or projects for the construction period, as well as then convert, once they're converted, then into a refinance facility. Now, as the government is emphasizing more on the lower income strata segment, middle income and lower income segments, the risk sharing facility that we have actually come up with, the risk sharing facility that we have come up is basically a guarantee trust by the government of Pakistan, and PMRC is the trustee. Okay, initially $10 million were provided by the World Bank. What we do is on the portfolio basis, we actually provide the risk coverage up to 40% of the portfolio. And 7 Islamic financial institutions have already availed this facility. Now, the third product, that, as I said, that we offer sukuks on a fixed term basis with varying the maturity profiles. Okay, I'm actually, this one is pushing me to speak quickly. Okay, this is the portfolio size as of March. And now this is not good. So, okay, yeah. Just a brief of the book. As of 31st March 2022, the conventional side did 16 billion, and the Islamic side did 8 billion. Overall, we have 18 customers on board, out of which 5 are the Islamic financial institutions, and 1 is a non-banking finance company in the Islamic book. Now, the Sharia structure for the Islamic module is, as I said, it's based on the principles of Sharkatul Aqd. What we do is we actually, the existing portfolios that the banks have on their books, we go and purchase share from there, and we create a musharaka pool. Profit sharing ratio and rates are agreed upon at the time of entering into the contract, and profit is shared on the basis of pro rata or agreed PSR. And the assets are managed by the institution where they lie. Okay, and the loss is shared on the basis of ratio of the investment. The key principle, the Sharia principles of the musharaka itself.
One important point here is, I think in all our products, in refinancing product also, this was the first in the entire Middle East, North Africa, and South Asia region. So, and we had a few chats with our Malaysian counterparts in Saudi as well, explaining to them in terms of how this product was structured, both this as well as the risk sharing facility, which is also a unique.
So basically, this is the Islamic refinance scheme in the Mensa region that we've developed in Pakistan. Now, going to the credit risk sharing facility, the credit risk sharing facility is basically based on the combination of the kafala and conditional tabarru, where the principal or the profit or the rental portion is guaranteed through the kafala, and the principal buyout or the promised buyout units are covered by the conditional tabarru. Now, there are certain limitations on that. We actually, the entire Sharia fraternity of the Islamic banking or Islamic financial industry has approved this structure where we are allowed to take 2% as administrative cost. Now, this cost is an administrative cost. Let me reiterate that it's an administrative cost. We cannot use it to cover our future losses. It is kept in a separate accounts and is regularly audited for ensuring that this fee is not used for covering the future losses. These are the 7 financial institutions who have subscribed to the master credit facility loss coverage. As you can see, these are the biggest banks, Islamic financial institutions that are operating in Pakistan. So you can actually see the confidence level in this product. Now, coming to the sukuk. The sukuk is basically it's a unique structure that we offer, and it's another avenue that we have provided to the Islamic fraternity in Pakistan, because there is a dearth of assets and investment opportunities in Pakistan. So PMRC from their platform has actually developed a musharaka based sukuk structure where we offer fixed rate sukuks for short, medium terms. The institutions, they come and purchase our partial shares, and we create musharaka pool. PMRC manages the pool, and then profit rates are agreed upon when they enter. And also in the same structure, we also create special reserves for profit equalizations. So to ensure that the returns are generated smoothly, right? The amount of sukuks that we have done is about 4.1 billion. We've done two instruments as of now. And now Rizwan is just pinching me. Thank you very much. I hope if anybody has a question, then Mudassir Saab is there. I'm there. Feel free to ask.